Good day, traders. A short recap on the S&P short heading into the open of the US 12 candle window. Again, my thesis is major quarterly round numbers. We had traded below 38,500 or 3850 on our major numbers. We're inside of I'll zoom in on this. We're down low. We've had a fairly large move down from last week. We'll just zoom out again. We dropped 3 levels. We're in the 3rd level. The market had pushed below 50 and potentially found support off the previous day's low. Again, my thesis on this pair, I was watching oil at the same time, was that it potentially had room to come down to the low of the day one more time before exploding vertically. And when we zoom in on our 100 pip box, we can see that London put in a low of the day at 38,300. This is my 00 box is now heading into this session of the US 12 candle window. Now, I look at the, again, 50s and 00s. At 50, we had a lower high of the day of London put in place just prior to our US 12 candle window. They've moved it down to the lower 100 00 box. My thesis was that we would potentially maybe retest the low of the day and trade down to the quarter or 250 level and then potentially see a reversal. In that first hour, we took out the lower high in the first 15 minutes of the US 12 candle window. So somebody, a trader asked, do I wait for a break in structure? Let me reiterate that in a trend trade, I do not look for a break in structure. That is a counter trend setup. So for example, if this, we'll look at this because there's a break in structure here for the long trade back up. But when I'm revisiting in a downward trending market, I don't need a break in structure. What I again am looking for is there evidence of a high of the day being locked in place? This double top inside of the lower high at 50 is my high of the day being locked in place prior to the US window. So if they trade up in that first 30 to 45 minutes, 15 minutes, whatever that may be, I want to see them trade back up into the high, hit the lower stops, with the thesis being that this market potentially will still break the low, even if it trades down into this level, maybe around that quarter level into level 1. But again, when I'm down low like this, I'm not playing games. I'll take the trade. I got a 1-bar stop. We traded up into the high right towards the end of the first 15 minutes. Off the quarter level, I'm in the market. It's a 1-bar stop. I'm into the high of the day. As this market trades down and we get double-sided trading, I am tightening my stop up on this market. Now, obviously, there was 50 pips of movement, but I wanted to give this market room to potentially blow through the low. The first pullback, after the follow through, I'm on top of the bear candle and we're pinned out on the next stop hunt up. Again, now the thesis changes on this market. I'm out of the trade with 16 pips. Now this market moved pretty much 50 pips from top to bottom, but again, giving this trade a little bit of room. These candles are a little bit more bigger than your normal Forex pairs. But this move up now changes the thesis prior to the New York Open. This breaks structure on the inside, and then the dump, the creeping trend down, that's our break in structure for the vertical move. There's the 100 pip move down in the explosive engulfment right at the New York Open for a 200 plus pip move straight up. Now I took oil, just the decision I made. Obviously this one exploded and continued to move strongly. Both pairs have moved strongly, but it's day one. Again, I took 3 trades, which is really not that common for me. A reasonably good day at that point, having taken more trades than I usually would. I was happy to get off the screen, lock in the money, and let the market trade out today and set up. We got 4 more days. We got great trades ahead. But this was an excellent long trade, low of the day opportunity coming out of a major quarterly level, low of the day after 3 levels of drop for an explosive short squeeze back through the high of the day. An excellent trade for traders who took the indexes, S&P. Again, just a decision I made, but on the day, and then chose to go long on oil. There's plenty of opportunities, traders, but first hour thesis was negated, the break in structure, then the dump into the open of the session. Again, they're down low. This is the V bottom pattern, the dump and pump for the vertical move. Similar to oil,